Hi everybody, welcome to another update on the Gold Forecaster Index, the holy grail to predicting gold prices. I already forgot what I said last video, but let's look at the gold price. So from December we see that we're actually flat, went down, went up, and then back flat. But you can see that the trend is actually up. Okay, so I expect it to keep on rising. So let's look at our leading indicator, the gold forecaster index. This is going to predict what the gold price is going to do. And our latest data point says, looks very good from here to here. So we're almost in the positive. I expect this to reach positive territory in the coming months even. So this is really bullish. Trend is up. This is a leading indicator, by the way, so it could be there is some weakness due to these negative numbers. But in a few months from now, if this goes positive, then we should move much higher. This is still an old chart. Misery index down a bit. So we need to wait for this to move back up when inflation rises and unemployment rate rises again. Real output still very good. Yeah, the economy is doing pretty well. There is some efficiency. Efficiency is back, so inflation will go down a bit. But there are people who are saying that inflation will be coming back in the next wave. GLD is flat, but starting to rise a bit. So this could be a bottom, and gold would start to break out. COMEX gold numbers also showing signs of a bottom, so this could go higher. Important LBMA numbers also showing a sign of a bottom, so this is correlated, and if this starts to move up, then gold will make new highs. So far so good. China demand numbers also very good. This is the latest gold data from December. It's flat, better than nothing. Compared to last year, it's up. So that's good. Silver, not so much. So I still like gold more. As you can see here, silver demand still dropping. That's SLV and PSLV. Shanghai Future Exchange for silver also down. COMEX silver, yeah, maybe starting to bottom out a bit. JP Morgan still in a downtrend, so that's bad for silver. And this I will talk about later, I think. US mint sales were low, but that's each December is going to be low. So we'll see later on what happens. Premiums still low on silver, so that's not positive. Same with junk silver, low premiums. Gold premium for China actually is very good, so it's still above 2%. This tells me that gold will go higher. Just look at the history. It will always go up when the premiums are positive. Even the silver premiums are positive in China, but not in the West. Gold premiums down a bit, but still higher than the previous years. PSLV premiums were still negative. Yeah, this is a bearish COT report. So shorts have increased. Yeah. So I think the banksters will try to do something to reduce their short positions, and we could see some volatility downwards. So this is not that bullish. Same with silver, not that bullish. Yeah. Open interest, however, is in a rising trend. Lease rates. Yeah, topped out. So when this moves downwards, there should be some support for gold. Here as well, there should be some support for silver. Swiss franc tells us that that gold should be strong. When the Swiss franc is positive, then gold should go up. Tips rates, yeah, moving up a bit, is bullish. We still have positive real yields, so this needs to revert higher to push gold up. Seasonality, we are currently here, so we should be going up for the next month until Chinese New Year, somewhere here, and then they will probably try to crash it a bit with Chinese New Year. Bullish percent index for gold miners. Looks toppy. Yeah, that looks like a top. Could be some weakness. Probably in the large majors, they are still overvalued. There are some smaller mines that are very cheap. And I will talk about one of them. Gold should move higher and stocks should go down based on the currency in circulation. This is a bottoming pattern. When this moves up, gold should move up as well. So this looks very good. Google Trends on how to buy gold. Let's see. In the meantime, debt to GDP should rise. Debt is already at 34 trillion. And I think GDP is going to be weak. So this should be moving higher. Near-term forward spread, let's see. Rate hikes. Yeah, no rate hikes anymore, only rate cuts. But the Fed says that it could happen in the third quarter. Yeah, you can see already here 2-year yields went back up. So yeah, maybe a pause until the third quarter. In the meantime, we can keep accumulating gold. So how to isn't working here. Okay, how to buy gold? Still in an uptrend, so that's good. Near-term forward spread at 1.56 minus. That's very good. That means that we have a coiled spring that is about to break back up, and that is positive for gold. That means that there are going to be rate cuts at some point. Central banks are still buying. These are the foreign gold deposits at the New York Fed. It's rising. So central banks are buying gold, and you should do that as well. The banking crisis is accelerating. This is concerning. So, yeah, liquidity is going to dry up at some point in March, and this is going to keep on rising. They will need to expand that funding program because it's coming to an end in March. Cash, the cash assets of the small banks is pretty low. So, yeah, this is good for gold. As deposits go away, they will flock to gold. This is an analyst estimate of Newmont Mining's revenue. You can see that for 2024, it's rising. So they expect gold to go up. This is just because of the merger with Newcrest. But you can see that this is probably going like this, and then it's still very positive for 2024. So they expect gold to go higher. Central bank balance sheets. Let's take a look. Yeah, the Fed is still in QT mode, but will soon go back to QE, I think, maybe after March. So the red line is still dropping. However, the ECB is already starting to do QE. Japan as well. So something is starting to happen. They are going to QE again. This also a very important chart, reverse repo, is dropping very fast, and in March will go to 0, which means that if they keep on doing QT, the reserves here will need to decline, and that's very bad for stocks because that means the liquidity is going away. So we'll see. March should be the pivot point. Money supply is rising. Monetary base is rising. M2 is flat. Okay. So it's pretty stable. Inflation is going to stay high. As you can see here, Michigan inflation expectation is at 4.5%. That's very high. So I don't see deflation yet. Inflation is actually coming back lately. It's back up. So yeah, there is no deflation. I would not get into bonds. Stay in inflation assets, commodities, gold. The trade deficit, we got new numbers. Look at this, budget deficits rising. This is going to roll over. Yeah, there was an improving services surplus and actually also an improving trade goods deficit. But okay, we're still in a deficit. I think this is going to roll over. Let's see. This is telling. Yeah, so this is starting to go negative. this chart. So I expect deficits to increase in the coming months. Import price is up while export price is down. That's going to increase the deficit. Export both are down here for commodities, but it looks like the export price is down more than import, so that's going to be increasing deficits. Import and export, yeah, that's Q3. But the latest data I have seen that imports and exports went down, so I expect GDP to be weak going forward, and deficits will go up. Yeah, it's starting to roll over, as I said many times. Capacity utilization stable at 79%, still in inflationary territory, so it's not crashing yet. Path of the rate cuts, yeah, we still expect some rate cuts this year. They could pause it maybe a quarter or two, and then they should start cutting it. That's what I think. They're probably waiting for a market crash before they are going to do it. So let's see. So this was the dot plot for the September meeting. Look at these dots, and now this is the one of the latest meeting, and it's lower. So expectations are that they are going to cut faster. So rate cuts will be coming. Let's go over some commodities. Copper. I think copper is going to go higher. I just found this correlation very interesting. Look at the bonded copper premiums in Shanghai. Whenever you see a peak like this, that means we are at the bottom. Going up, 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 and probably also up here for copper. Yeah, I think we should be going above 4 this year, at least. Also found something interesting about zinc. So what you see here is the zinc concentrate import profit or loss. So if it's positive, that means that the Shanghai price is higher than the international LME price, right? So that will incentivize the Chinese to buy cheap international zinc and sell it domestically. So that means that they will import more zinc. And then the price rises. Okay, same here. They will import more zinc and then the price goes up. For example, here you can see how they are importing more zinc. Okay. The same goes for if it's negative, then they will not import that much and then the price drops of zinc. You can see that here the imports go down. So where are we now? Now we are negative. So that means zinc should go down as they import less. Let's see if it works out. I'm not in zinc. I don't like zinc. Oil. Yeah, this is the EIA and they are saying that we will get surplus in the first quarter and the second quarter. So oil should go down now. And then we should only get back in somewhere at the end of the second quarter. So I'm not in oil yet. I want to see what happens. Oil is only up because of some Middle East tensions, but this is not looking good for me for oil, so I'm staying out. Oversupplied in Q1, Q2, and Q3, so there are better things to buy than oil. This was a nice chart. This is the Shanghai Gold Premium. So this is the Shanghai Gold Premium currently at 2%. And you can create a channel with this. So these are the lows of the channel. These tops are the lows, okay, the green ones. And these lows are the tops of the channel, the red ones. And then you can create a nice channel, and we are going to go to 2100 soon, and then 2200 maybe by mid 2024. So we should be going higher with gold. Also here, the equity bond return today is positive. So that means that if bonds crash, then equities will also crash. What will they do? They will go to commodities. I think both of these assets will crash and they will go to commodities like gold. So you will see a higher bond yields, which means the bonds go down in value and gold will go up. Just like what happened here in this green zone, you can see that it's correlated. Yields are correlated with gold. In the negative zone, it was negatively correlated. Now we're clearly back into positive green zone correlation, which means that higher yields will lead to higher gold. So that's what I expect. Gold will be going up. And we have some gold price forecasts here of several analysts. Kiyosaki says we are going to 5,000 in 2025. That's maybe a bit too much. Gareth Soloway is more believable. He's saying we are going to go to 2,500 by the end of next year, this year. So all price forecasts are in the positive. Only two of them are negative, which is the World Bank and HSBC. I wouldn't look at these ones. Gold is going much higher. And the reason you have gold is because something like this can happen. In Argentina, gold doubled in one day because they devalued their currency. So which gold miner should we actually buy? I just buy the cheapest ones. This is the latest status, EV to free cash flow. Cheapest ones are Soma Gold, Monument Mining, and that's where I'm putting my money. Monument Mining, for example, at EV to free cash flow of 2. We still need to see the results. I'm not sure about the all-in cost yet, but it should be pretty cheap. And they're trading at half book value, so very cheap company with good leverage to gold, 5.5 leverage. Soma Gold also very good, leverage 7. So more leverage for Soma Gold if you believe in the rising gold trend. Then this one is also very good. They did have some news about the wear on the mill, but that will be fixed in March. And then everything is back fine, and they will bring El Limon online as well. We will hit new record production by the second half of this year, and everything will go up with Soma Gold. Monument Mining, also very cheap. Just need to see what their production will be. Let's just take a look. What's the upside currently? from 40 million US dollars. Plenty of upside, at least a double. Yep. And more upside if gold goes up. Soma Gold. Let's see what we have here. We are currently at 60 million CAD. Upside is going to be 130, 150, easy double, and more upside if gold goes up. Nothing has changed here. We are still going to 47,000 production by the second half of this year. Run rate. Yeah. So that's where I'm going to put my money. Gold is still looking good, as you have seen from the analysis, and I just buy the cheapest ones. So that was the update, and I'll see you in next month.